Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel L. Connon.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick. Joel still hanging out with Kitty Rock in northern Michigan, but this morning we are in the thick of it now, folks. Earnings season, we've got some good ones today. Netflix, Goldman Sachs, Bank of America, J&J, Lockheed Martin, Schwab, TD Ameritrade, just to name a few. IBM, CSX, and UAL are after the bell. We'll cover as many as we can, and we'll, of course, take your questions in the chat. Our guest today is our regular Nic Chahine. He's the author of Create Option Spreads on Marketify. Looking at the S&Ps this morning, we are in the red. Crude and gold are in the green. However, Dennis, how's it going?
Holy cow, that was fast, Spencer. I was still on mute.
Oh my gosh, I'm sorry.
You're fast. A lot faster intro than Joel. Whoa.
Yeah, I'm sorry. Wow. How's your morning been? You've been trading since 3?
Oh yeah, I'm always up trading. I just never sleep anymore. When you get kids, you don't sleep anyway, so I figure I might as well trade. If my kids are going to be up all night, I might as well be trading as well. So trade, kids. That's a great way. I'm in a permanent fast market, as Joel would say.
That's a great way to use time that you would normally just spend sitting there trying to make your kid fall asleep. You can just
I got the baby in one arm and I got the trading, the mouse in the other hand, and just giving her. That's how we work over here.
That's a really good. I wish my dad had done that, and then I wouldn't be here. But okay, well, what are you looking at this morning? Because we got a lot.
I'm looking at a ton of earnings reports here. So you look at the S&P's flat. You're like, not much going on. Individual stock movement, yes, there is a ton going on. Got some big ratings changes here as well, with AMD catching a downgrade at Barclays. But first, I want to start with the Netflix report from last night. Stock blasting off into orbit once again, up to all-time highs. 9.5%. Now trading with a multiple of almost 200. Obviously, it's not one for me as a value investor, but for the Momo traders, they are loving it. Up another 15 points here this morning. Spencer, give us the details.
Well, Q2 sales of 2.79 versus 2.76 billion dollars. So they beat that. Q2 EPS 15 cents versus 16 cents. We don't really care about that, though. We care about the net subs. They added 1.07 million domestically and 4.14 million new subs internationally. And on top of that, Q3 EPS 32 cents versus a 23 cent estimate. Sales of about $3 billion versus $2.87 billion. So great guidance, and those international subs,
I mean, it's big numbers. It's good numbers here. It's not surprising the stock would rally on this. So, you're up 15 points here now. The question is, where do we go from here? Well, resistance is going to be very tough to find because it's at all-time highs. I mean, you can look at the after-hours trading to try to find some points here, maybe a psychological 180. But for the most part, it's just when stocks are making new all-time highs, I don't want to be short them. If for whatever reason we start to give some back, the old all-time high is around 167. So, you start to think maybe that's, an area where, actually, I'm just going to grab it. Yeah, 166.87 was your old all-time high. So you're 10 points above that right now. It's all air in here. And, when I'm in a situation where I'm trading a stock that's in all air, it's difficult. I don't have any levels to fall back on. So I like it to, digest the move. Maybe eventually find, some, support or, some point where it makes a double top or double bottom in a couple days, and then maybe make a trade from there. But in here, it's just moving. It's already moved up 15 points here. So it's difficult to come and initiate a trade here now, in my opinion.
Netflix has had a really, really good week. First, they get nominated for 91 Emmy Awards, and now this. They're having a good week.
It's been it's been a good week, not even in the stock performance. Just go back July the 6th. So we are going back only 12 days ago. 12 days ago, stock fell on $145. It was $144.25. It's now up 31 points from that low. Impressive move up here for Netflix, obviously. Trading up $176 here now. And it's hurting a lot of the guys. Like Einhorn, I believe, is short this stock, hurting his performance. He's also short Tesla, and they were. I saw it go by my timeline. I believe Einhorn is actually down 2% this year, where the market is up 9%, and it's these two stocks that are beating them up. I mean, it's difficult as a value investor, and if you're a value trader, you might say, okay, well, Netflix, Tesla, these things, seem like screaming shorts because the valuations are just insane. But the valuations keep getting more insane. So, how you could have said that on $100 with Netflix. Now it's trading 200 multiples. So how do you know? Like, I don't know how you can come in and just say, okay, I'm going to short it now because this is going to be the top. Maybe it is, maybe you get lucky, but honestly, it just continues to get more, overvalued in my opinion. But value doesn't matter at a certain point in time. Right now, it doesn't matter for Netflix. It's all about growth, and that's what the market wants. And it showed growth here over the quarter. So give it to the bulls, give it to the people who are along the stock. It's performing well. I'm not going to participate in it because I'm a value investor, but just different style for me. If you're a growth guy, though, you like Netflix.
A few things. One, they did say on the call to expect negative cash flow for a long time, right? This is not a company that will be profitable, tomorrow. So that's one thing. Second thing, they also said the CEO on the call. The one thing that really crossed my radar was his singling out of Amazon as very scary. And so I think that, or awfully scary, was the exact words that Reed Hastings used. And then the third thing I wanted to say is that, oh man, now I just lost my train of thought.
I'll just say, when they're saying awfully scary coming from the CEO, that's a scary comment for me too. What's stopping Amazon from really beefing it up and really, coming in here and competing directly with Netflix? Nothing. I mean, they're already trying to do it. Whether they're going to be able to get up to Netflix level. I mean, Netflix has a great product. I have it too. It's cheap. You can watch a lot of things. It's, I believe, replacing, a little bit of the cable TV. People are getting rid of their cable. I know some people doing that and just having their Netflix account. So props to them for having a fantastic product. It's just valuation that I'm scared of. As an investor, I'm not arguing with the company. They've done everything right. There seems like everybody's got a Netflix account. So, it's cheap. So not arguing with the product at all. I'm just, it's always been a value call for me, and it's just not my style. I've always stuck to value investing. The reason is that I've been in the market for 17 years, and I've seen bubbles, and I've seen them burst. Not saying Netflix is a bubble. Sometimes, the growth can catch up and make the thing look like a value stock. I just, when things trade 100, 200 multiples, I got burned bad in the tech bubble, buying companies that, and not that I got burned bad, but I lost some money on some individual stocks on companies that had high multiples, and I just kind of went from that way. I'd said, going forward, I was going to take the Warren Buffett approach, and if it wasn't a reasonable valuation, I was going to put it in my investment portfolio. And I've missed out on some of these growth stocks big time, like the Teslas and the Netflix not being in my investment portfolio. But I've had stocks like Apple in there that have performed well as growth stocks, but / value stocks as well. So I that's how I approach the markets, and Netflix just not for me. But wow, if they're saying stuff like Amazon looks awfully scary, that sounds scary for me too, Spencer, because if Amazon comes in there, growth will slow.
Yeah, and they're already in there to an extent. The third thing I wanted to say before is that, and you're already seeing it this morning, is the analysts sort of coming up, piling on, right? So we do have Rosenblatt upgrading from neutral to a buy. Looking at my list of ratings on Netflix here, I see Deutsche Bank, I see Jefferies, I see Macquarie, I see Evercore, and I see Citigroup, all with neutrals or holds, and I would expect to see some follow-through in the coming day or two with regards to those maybe being upgraded to buys.
Is anybody, is Packer still selling it?
Yes. Packer is still...
Is he the only one? Everybody likes to pick on poor Pachter, but at least he stands up to his calls and says when he gets it wrong. You said it on our show there too.
Yeah, that I can see, Wedbush is the only firm with an underperform rating on Netflix. That, from what I can see, going back, I'm not going back 12 months. So yep, he's all alone out there. So
well, we've exhausted the Netflix. Traded 500,000 shares already. It seems to be finding its home in the 175, 176 area here, at least this morning. So we'll see. I'm going to give it a couple days. Not when I say it's not for an investment for me, it doesn't mean I don't trade it. I trade Netflix lots of times. I trade Tesla lots of times. As day trades, I trade everything. And I've always said I'm a momentum trader. but I'm a contrarian investor. So there's always, setups here. But even for a day trade, it's difficult to just come in here and say, okay, 176.11 is my level. Just because, you're in the pre-market here. I want to see a few other points where, I've got a level or something to lean on, where I just don't feel like I have anything to lean on up here. And lean on, I mean a level where, okay, if it breaches this, I'm going to get out. I can't really see exactly where my out is here, and that's why even as a day trade, I'm going to let the dust settle here a little bit before making a trade on Netflix.
All right, moving on to Goldman, I would say the second big one of the morning
For
here.
sure.
Let me pull up the 5-day chart. So Goldman Q2 EPS $3.95 versus $3.39. Good number. Sales 7.89 versus $7.52 billion. So good numbers on the top and the bottom. And Dennis, they did the old pop and drop.
The pop and drop, and we've seen this from almost all the banks. So, and the one thing is, when you look, you can say JP Morgan, Wells Fargo, Citi earnings. When you start getting those other earnings, then a lot of times the other ones will follow suit and do certain things, and that's why it's kind of like a tell. So we saw the JP Morgan report was pretty darn good, and they turned around after rallying the stock, they hit it. And it was the same thing on the Citigroup report as well. I know these things bounce back a little bit afterwards, but those are sometimes tells. Goldman, I will just tell you, technically speaking, from a purely technical perspective, ignoring the report altogether, this 230 level has been an absolute monster point of resistance. Look at the chart for the last 4 months. It just stands out like a sore thumb. Harlan Pine used to come on the show and he'd say, bring up a chart and look at it for 5 seconds, and if the level jumps out at you, then you've got a trading level, and right away when you look at this chart, you say, whoa, look at all those highs right around 229, 230, 231 for the last 4 months. All kinds of highs in the 230 area. So 230, big psychological resistance here as well. I know it snuck above it in the pre-market briefly there, but I think that remains resistance. And resistance is resistance until it's broken. So 230 remains major resistance for Goldman Sachs.
Yeah, 230 was last broken April 5th, looks like. That was the last day that it got above.
I mean, it got 230.64 on July 13th, but it's still in the 230 area, and it's a $200 stock, so it's not that much above it. Yeah, and significantly above it was back at the 230.289 back on April 5th. That's when it was significantly above like 230, but still, 230 jumps out at you.
All right. We also had Bank of America this morning, so we're most of the way through the big banks. Bank of America Q2 EPS 46 cents versus 43 cents. Sales of 22.8 versus 21.8 billion dollars. So it beat on the EPS and a beat on the sales for Bank of America.
They all beat. And that's, and the same thing we said, when we were covering the Citigroup, Wells Fargo, JP Morgan earnings. So all the reports weren't bad. One consideration, though, is when they were popping, and we were saying this when they were trading up, is that we've had some speak from Yellen, and she was a little more dovish. And going forward, the banks want higher rates. So I just think when you get these pops here, you have institutional money managers saying, yeah, good quarter and everything, but if interest rates aren't going up, where's the next quarter going? Or where is, we going forward here? If interest rates are going to stay, where they are. And we're not saying exactly there. She was just being a lot more cautious in her comments than she was before. And that makes me think that, and maybe this is a point where the banks, when they start to pop, they might find sellers. And that's what we've been seeing. Bank of America, just going back to the levels here, we've sold off pretty hard in the last 5 days from the 25 level. That's a nice level. I've had this swing number around 24 where it's been around there a couple of points in time. The low from 2 days ago, I'll just go grab that on the chart, was 23.82. You're right there right now. If you take that out, maybe you start thinking about 23.50, but it almost feels like it's in the middle of nowhere here. And when it's in the middle of nowhere, I usually move on to another stock to trade.
Okay, wait.
Right now.
I want you to elaborate on that real quick. So, stock like this is in the middle of nowhere. So, define a stock that's not
a clear trend. And I would say right now on Bank of America, I don't really see a clear trend. I mean, you could argue it's in a little uptrend for the last month, but really the last 3 months we've just kind of been range bound. We've been between 22 and 25. So now we're at 23.87. So you're starting to get in the middle of that range. When something is in the middle of the range, you don't have to make a trade on everything. You don't have to swing at every pitch. When the pitchers are throwing you stuff in the dirt, I don't swing at it. I move on. So I want to look for better setups. Like Goldman set us better. If it got there to that 230 area, then you say, okay, well, it's worked here multiple times. Maybe it's going to work here again. Bank of America gets up to the 25 area, and I'd say, yeah, you got major resistance up there, but it's 23.85. I think 25 is out of play here for a while. So this is why I move on to a different stock. When you got 6,000 stocks you can look at, and the S&P 500 is really where I focus, but there's 500 companies there that you can look at charts on. There's going to be better setups, and I just don't see a setup here, and that's why, on Bank of America, if I'm in it, it's a different story, but if I'm looking to initiate a trade here, I don't really see where the setup is.
All right, moving on to Hog. This is a doozy. Good.
Always miss. First of all, I feel like Hog always misses.
Well, no. They beat a good quarter, but bad guidance, and we know that guidance matters more than earnings. So let's get to the numbers. Q2 EPS $1.48 versus $1.38. Sales $1.77 versus $1.59 billion. So again, good Q2, but they did lower their motorcycle shipment guidance. They see shipments down 6 to 8%. Previously, they saw it as being flat to modestly down. 68% is a little more than what they were saying before, and the stock is now getting kind of...
It's getting killed. It's down 10% here now, taking out obviously the 50 support, so you got to go to the weeklies to try to find support there. And you do got some, if you go back into the 42, 43, that's 4 points down here. There's a couple, pesky little lows back in 2016 when we got down to 47, which is right where we're right now. But again, I'm almost saying the same thing on this one. It's kind of in the middle of nowhere right now. It gets down to the 42, 43 area. I like those lows that we set back in April 2016 and July of 2016. Right in here, 47.05, I don't see a setup either.
I can't think of a stock or a company that I care about less than that was once relevant and now isn't than Harley Davidson.
It's relevant to certain people. I mean, obviously, there's a lot of fans of Harley Davidson out there. My neighbor's got one, loves Harley Davidson. I mean, there's some hardcore Harley Davidson people out there that like to ride their bikes. It's got a nice dividend, 3.11%, so you can't argue with that either. It's getting, more today. It's down $5. So there is always going to be buyers for Harley Davidson, or for the motorcycles, and there's always going to be buyers for the stock at certain prices. But I just feel like it's out of favor here right now. It hasn't really participated in the recent bull run. I mean, we're up 9% this year. The stock's trading now down probably, I don't know, we started the year up at $57. So we're now down 10 points. So you're talking about stocks down probably over 20% for the year. On a year, we're up 9%. So relative strength is not in the stock's favor here either. It's not at a major level of support. So I'm not jumping in here with two hands and saying this is going to be the spot where it's going to bounce.
All right, moving on to big healthcare. J&J reporting this morning, same morning that the new healthcare plan gets temporarily kiboshed in Congress. J&J is reporting Q2 EPS $1.83 versus $1.80, sales of $18.84 versus $18.95 billion. So a miss on the sales and a beat on the EPS. They are, however, raising their guidance for the fiscal year.
And what we just said, guidance matters more than current earnings. And you're seeing a pop here in Johnson & Johnson. And J&J has been just a fabulous performer, exact opposite of HOG. I mean, the stock is a couple points off its all-time high. Since 2016, the stock is up from $100 up to $133 for a stock as large and a company as large as Johnson & Johnson. A 30% move in the last year and a half is very impressive here. 2.5% dividend. I mean, it gets up there to that 137 area, though. I think you got major resistance. We're at 133.5. Man, there's not a lot of good setups. We're kind of in the middle of nowhere in this one too. Do have a couple of highs, 134.06, 133.97. Those are minor points of resistance. If you get above there, then you start thinking about the 135 and then the 137. But this morning we've kind of bounced around. We did trade up a little bit. We've leaked a little bit of those gains. But that being said, J&J relative strength is still pretty nice, especially consider some of the other defensive stocks have been hit as of late. Johnson & Johnson has held up relatively well.
I was asking Brent this morning, and I guess I'll ask you the same question, Dennis, but I read when I woke up that, two more senators had backed out of the new healthcare plan, and then it was temporarily dead, at least for now. Any implications for the market, this morning? I wasn't seeing a whole lot moving, but looking like that the new healthcare plan won't be going through for now, but I wasn't seeing a whole lot of follow-through. I don't know if there are any implications, any ETFs or any stocks that really would have been moving off that news. Do you?
Stock Cats on Twitter covered this the best last night, and I'm just going to grab the tweet from you. He tweeted right out when the healthcare bill got killed last night. He tweets out, S&P futures plunged 3 points on news the healthcare bill has failed.
There we go.
The plunge
I
3 points.
guess
I mean, this is the new plunge. When we go down 3 points, I mean, we obviously bounce back even those 3 points here, but it's, funny how, everything has kind of changed. I mean, VIX is just getting killed. And, you talk about the Goldman earnings and you can talk about the other ones. We're back under 10 on the VIX. The trading, revenue at Goldman was down. And it's not surprising. I mean, how are you supposed to, trading revenues go down when there's less volatility? And this VIX under 10. As a trader, I hate the VIX this low because it's difficult to make money when the stocks aren't moving around as much. So, you want to see volatility, you want to see those big moves, and that's where you make bigger money. So when the VIX was trading up in the financial crisis of 60, 70, 80, those were unbelievable years for me because there's just more volatility. VIX above 20 is good trading. VIX in the teens is decent trading. VIX under 10, that's tough to make money trading. So, you always can make a little bit, but it's going to be less because the moves are less. So it's not surprising some of the trading revenue is down at some of these other companies. With regards to the healthcare bill here failing, is there any implications overall? I don't know. I mean, the S&P futures hardly moved on it. It seems like, it doesn't, the big, even though, you would think that's not good for the market here overall, it shrugs it off. And the S&P futures are up at all-time highs. We're shrugging off everything again here. So it's difficult to get bearish on the market because the healthcare bill failed when I see a response to it of 3-point fall.
All right, Lockheed Martin likes the Trump administration. They're reporting this morning, and they are increasing their guidance as well. First, the earnings, Q2 EPS, $3.23 versus $3.11. Sales of $12.69 versus $12.42 billion. And again, raising that fiscal year guidance.
Lockheed Martin. So we've kind of been trading wide here this morning. I know we saw a tick up there, and I'll just go grab it. I think it was up to 296. Yeah, 296.77. Just some odd lots this morning. Probably right on the number. It's kind of thickening up a little bit more here now. 291.21 to 293.25. So it's looking anywhere up from 2 to 4 points here this morning on this number. I don't see anything major here. I know you can say the all-time high is right there at. I'll just grab the all-time high there for you. Which is just actually from a couple of days ago. So we're taking out the all-time high, 289 or 288.87. So you're up at all-time highs here. Again, I think the next big psychological hurdle is 300. So, if we can hold on to these gains, stay above the 289, that's the next big hurdle is $300. I don't see much in the book. I see 7,400 shares up there at 300. So it's not like it's, a big size in the book, but it is a $300 stock. So 7,400 shares is a little more relevant when you see 300 or a $300 stock. But that's really the next big psychological level for me, $300.
Dennis, when you're trading all these stocks that are at or approaching or around their all-time highs, how do you sort of negotiate that number? The fact that
so first of all, and Joel and I both, if you've listened to the show for a while, like our support and resistance levels. When stocks are at all-time highs, you don't have any resistance points. Like there's no real chart resistance point here on Lockheed Martin. It's never been up here before. So, it can really go anywhere. So what I do is, I know Ace is a fan of that too, is I go to the psychological levels then. Where is the next big level? Well, 293, 295. You can look at a pre-market high, but it was an odd lot up there. It really hasn't traded a lot of volume, only 5,100 shares. So I've just got to go to the next, if I don't have a real level where the stock's traded before, I go to a psychological level, and a psychological level would be $300. That works for a number of reasons, the big whole numbers. The first reason is that's where a lot of your option strikes are. So that's where there's going to be traders that are jockeying their, stock against their option positions. Stock goes above 300. Anybody who's got the 300 calls are in the money. Maybe they're going to sell the stock against it. Maybe they're going to flip and do some different stuff. Anybody who's got the 300 puts is now scratch on that. If it falls below that, then obviously they're in the money as well. There's a lot of jockeying around those psychological points, those big whole numbers, just because of the option positions. And then they're just big psychological levels. You get somebody that just says, okay, I'm a big institutional trader. I'm going to sell a block at 300. I'm going to sell another block at 320. They're just using big whole numbers to do it. So that's why when I don't have any physical resistance, like a resistance point where I can see on the chart that's traded there before, and stock's making all-time highs, you wouldn't, I go to the psychological resistance points.
All right, thanks for answering that question. I want to get to a few more of the earnings, one of them being AMTD, TD Ameritrade reporting this morning. Q2 EPS 44 cents versus 41 cents, sales of 931 versus $898 million. They're also seeing a record number of new client assets, and they reported for the quarter $22 billion of new assets. So AMTD, what are you seeing in the chart?
It's coming up to, well, it's all-time high 47.41. At least it's high for the last 10 years. I don't have a 10-year chart. 47.41. It's up here a buck this morning. It's only traded 372 shares. So it has not traded a lot. I can tell you somebody's making a stand of 46 bucks. In the pre-market, which is rare to see this kind of size in the pre-market, but on Edge there, you have 10,400 shares offered right now, 46. I saw that there last night too. So it's either there's an institution that just says, look, I want to get rid of 10,000 shares here. Do you want to take me out? Or they're trying to basically, they're selling a big chunk of stock there. So it takes a little bit of money to take it through there. I can tell you this morning it is bid at 45.60 and it is bid heavily at 45.30 with 7,200 shares bid there. So it does look like it wants to trade up. First resistance point, at least from an order flow perspective, looks like it's going to be 46, takes out that seller. Then I start thinking about the all-time high, which is up. And if we just go to the weeklies, I'll just grab that number for you again. That was up in the beginning of the year when we were in 2017 January when we got up to 47.41.
And the last one I really want to hit as far as earnings, UNH reporting Q2 adjusted EPS of $2.46 versus $2.38. Sales of 50.1 versus 50.06 billion. So a good quarter as far as UNH is concerned.
Here's the pop and the drop for you. Stock was trading up more this morning. It was actually trading up last night ahead of this number as well. And now you're looking at it here just kind of quiet. It's giving back. It's only up a little bit here now, so it's been leaking. Actually, it's kind of chopped around after the number, I guess, so it did trade down as well. If you're just looking here just from a purely technical perspective, 188 kind of jumps out at you, and I go to the book, I see 20,000 shares at 188 as well. So I think that's your first major level of resistance is 188. Support, which kind of jumps out at you, is at 185, where we had a couple lows here in the last, we've had 3 of the last 6 days bottoming right in the 185 area. So 185 to 188.
I want to move on
early trade.
Moving on to some actual non-earnings news. Puma Biotech, PBYI, they did report yesterday after the bell FDA approval for one of their drugs. I'm not going to pronounce it, but it's for early stage.
Come on, it's fun when you pronounce it. Give it a try.
All right, well, this is an easy one.
You're good at it.
This is an easy one.
Virtually everything.
I think this is Nerlinks. That's pretty easy. Nerlinks.
Oh, see, that was easy.
That was easy.
No problem with that at all.
And it is.
It threw a softball up the middle there.
I did. Yeah, I threw myself a softball. Again, for positive early stage breast cancer, FDA approval did happen. Shares trading up. As a result, I think they were halted and they resumed at around 5.55, I want to say.
Yeah,
and
reopening at 95 bucks, and it traded some stock there. So that's a swing number for me. Like, that's a psychological resistance point as well. When I say swing number, it's a number where a stock might come up to and then swing back the other way. Joel sometimes uses that term as well, and we don't define it a lot. So when I say a swing number, it's a number that could be a point of resistance where a stock could turn. So as for me, 95 bucks was the point where it opened last night after the halt. It's been trading below there for a while here now. I think you get up to 95. It's a psychological number as well. I think it runs into a little bit of trouble there. If it takes it out, different story. Then you start to think up, and go through. But 95 bucks is your first level of resistance here for PBYI. If I was looking for support, I'd probably look at the high from 3 days ago. Well, 94.70 was the high from 3 days ago. So I don't know, 90 bucks, I would say. You had a lot of highs right in the $90 area. For whatever reason, this thing continues to leak. I think I might find some buyers at 90.
All right, moving on to ratings. You were saying on the pre-market show that the most notable note that you saw this morning came out of Barclays. Yep. They were upgrading Xilinx I'm sorry, not ZY. Jeez.
XLNX.
XLNX, and they're downgrading Cirrus Logic. Right.
Downgrading CRUS, downgrading ADP, and downgrading AMD. And the big one there is downgrading AMD here. I'm not sure if you have the reasoning for that. If you do, let us know. But AMD is getting the beats on this morning. It's down 3.77%, trading at 13.28 in the pre-market. Kind of right where we got down to 2 days ago. We got down to 13.32. I mean, this is kind of in a clear uptrend here now, too. And obviously, it's pulled back multiple times, giving me a chance. I've talked about putting this one in my invest portfolio. I never did. I wish I would have, just to add a little bit of growth to it. But anyways, stock is kind of trending up here. You can connect all those lows from June and July, and you can see, and I'm just looking at it from when it bottomed in early May from 10. Then, you had the big swing up to 12.5, pulled back down to under 11 bucks. Then you had the big swing swing up to 13, then pulled back almost to $11. Then you had the big swing up to over almost $15, then pulled back to 12. Then you had the big swing up, didn't quite make a new high, so starting to form some resistance in the 14s, and now coming back in again here. So if that trend gets broken, that's concerning. As of right now, I'd say it's still a little uptrend there. So pullbacks are still probably going to find those buy the dippers as long as it's still in an uptrend.
What about Chipotle getting the upgrade there from hold to buy from the Maxim Group? Chipotle, who was in the chat yesterday or 2 days ago saying that they're not super thrilled about Chipotle's upcoming earnings report. I think that was John Dodson. But Chipotle with the upgrade this morning.
Yeah, and you know what? I don't mind this call. I mean, I was actually looking at this thing, and obviously it took off, but we had this 385 level for the longest time back, and I can remember this happening back in April, May, June, July of 2016. We kept bottoming in the 385 area. Then we came back in August of 2016, bottomed the same area again, 385. Eventually took it out in October, but then came back up, and then we actually tested it and bounced around. I mean, from 385 to 390, the stock has found support lots of times in the past. It's breached it a few times, but it's been a number where there's been buyers that have came in before. We just came down from May from almost $500. Now we start coming to the area where we found support before, and we're starting to try to do it again here. You can almost argue we got down to 390 there 3 days ago, 391 yesterday, and we're going to be up here today with the upgrade. So 395 we're trading at this morning. I mean, I don't mind this call. I think, I don't know about the company. It's a valuation issue for me as well, from a longer term perspective, but short term as a trade, I think you got a buyable level here. I think, if it breached the 385 level, I'd probably get out. You're risking yourself 10 points, but it's a $396 stock. So maybe it could bounce, maybe it could eventually take out the 400. I'd love it to get down at 385 itself, so I wouldn't have to risk quite as much, because I think if you're buying at 395 this morning, I think you got to be fair to give it 385. I don't love giving a stock 10 points, but it's a $300 stock, and you have to risk something to, it's all risk return. You got to have some risk in there.
Chipotle may have a new competitor in the fast casual space. Did you hear about the latest stock that may IPO? Bobby Flay's Burger, Bobby's Burger Palace?
I've never heard of that. Where is that?
Well, you've heard of Bobby Flay, right?
No.
He's the celebrity chef. He's okay. Well, regardless, he has a burger chain.
I don't watch enough TV anymore. I only watch Netflix.
You watch Netflix, right? You only watch Netflix and The Walking Dead. No, Bobby Flay. He's making he's taking supposedly his burger chain public, and the ticker is going to be his name, FLAY. Which
fun.
Already makes me angry.
Lots of competition restaurants, that's not the issue.
Another burger IPO. We got Shake Shack. We've got Bobby Flay's.
Shack? I haven't looked at it for a while. Where is the Shake Shack?
Oh, good question.
It's hanging out. 34. It's hanging out. It's always in the same spot. It's been there for a long time in the mid 34s. Look at the weekly on Shack between 30 and 40. 2016. Go back in the monthly chart. Actually, go back. For the last 2 years. This thing is like range bound between 30 and 40. We're right in the middle of 34, 49. Yeah. So that is in the middle of nowhere. But 30 to 40 on the Shackster. CMG, I don't mind it down here. We don't have anything on Flay yet. When it comes to IPO, we'll start trading it.
Yeah, Shack's a tough one to look at. I'm going to move on. Any imbalances that you're seeing here at 832?
What is jumping out at us here this morning? General Electric, 100,000 to sell. Poor GE always has sellers in there. Twitter, 30,000 to sell. 3M, 32,000 to sell. That's significant. Coca-Cola, 52,000 to sell. That's somewhat significant. Wells Fargo, 59,000 to sell. Visa, 24,000 to sell. There are more sell imbalances than buy imbalances here this morning. We're kind of trading flat, but it does look like there's a few sell imbalances. They're all relatively small, though. IBM's 28,000 to sell. I'm not really seeing any big buy imbalance. Barrick Gold, which gold is up, is a 37,000 buy imbalance, but no, they're mostly to the sell side this morning, which could put a little bit of pressure on the market, but they're so small yet. Again, on these nothing days, institutions hold their cards tight to their vest, and we don't see really their hands until probably 9:25 to 9:28.
I'm looking at Twitter right now. Are we finally getting over 20? Are we staying? Are we staying?
No, it's trying. That 20 is such a psychological resistance point. And obviously we topped out there 2 days ago, 1997. Yesterday we got above it at 2023, so we did get above it. We didn't close above it. And that's what Joel always wants to see. And, Joel, is pretty good with his levels. You like to see the close above 20. We didn't close above it, which is concerning. So I'm still going to say $20 is still resistance until you get the nice close above it, and then you start marching. But that being said, huge level for this. I mean, if it can get a nice close above 20, you'd be in breakout mode. So Let's wait till we get the close above 20, and then maybe we get interested in Twitter.
All right, 8:34 now. We're going to bring Nic Chahine on the fly. Nic Chahine, of course, the author of Create Income with Option Spreads. You can find that on the Market5
Good
platform.
morning.
Good morning, Nick. How's it going?
Going great. How about you?
Going great, going great. What are you watching this morning? There's a lot to watch. What are you watching?
I'm listening to your show.
Excellent. Excellent.
How are we doing without Joel?
How we doing?
It's who? No. You guys are doing great. The topics are good. I'm watching basically what
Joel sometimes. He's the level man. I'm trying to give levels here, and I don't do nearly good as job as Joel on the levels because Joel gets these things. He's done these levels for so many years, crunching the numbers and figured them all out. And I'm trying to do the levels here for you this morning, and I just do the simple ones that just kind of jump out at me on the charts.
The
Joel
level,
finds those other little ones for you.
Yeah, he definitely has a good pulse on that, and he's very accurate with it, and he gets upset when the market goes against him. So it's frustrating because the markets are not behaving the way they usually would on news, etc., because there's so much interconnectivity. Like somebody was talking this morning on your show saying what's going on with the bill. I think it's affecting everything because I saw a drop in the dollar, a spike in oil and commodities. So it's all related, and a rise in bonds, which puts pressure on rates, which is probably why the banks are sliding a little bit on top of the news. So it's all connected, and the equities are not behaving the way they should be 100%. So there are other things at play, and I think some of the bill not being passed or them giving up on passing the healthcare bill says, well, what about taxes then? What about this? What about that? So they immediately think down the line and say, what does that mean for the other stuff? So everything else moves, even though there's no headline about the other stuff, but they're moving on expectations.
So we had a lot of earnings reports here this morning. The biggest one we had was Netflix. I was trying to give you some levels of support resistance on Netflix from the chart, but that's difficult because the stock's at all-time highs. I know you got your options open interest there, so you can give us some levels from a different perspective, from the options perspective here. What are you seeing in Netflix this morning as it trades at 176.85?
Well, they did not expect this, I can tell you that. The options open interest expected I read downside pressure in it. But I always say on earnings, it's a complete coin flip on the short term. So if the open interest is correct and if they want to stand their guns, then it should give back some. But I would not short it based on that. So how I would short Netflix, if I wanted to short Netflix, is I use its own value, perceived value, against it. So if I think it's going to fall in the near term, I would buy a debit put spread near the money out, say, to August or September, and sell a credit put spread way out to December, way below, like in the low 100s, to finance it or most of it. So I'd be short Netflix for free, and ideally I would want it to fall, but not to zero, because I am long it down the line, and that would be how I would short it. And usually those come out okay. Because I don't have anything on the line, and I have good conviction in my short because there's nothing out of my pocket.
What's the time frame on doing something like that, though? So if you were setting up a trade like that, how far would you go out?
I would go out with my short debit put spread. That's a short position where I buy a put and I sell a put lower. I would do it at the money, meaning close to where the price is going to be trading or a little bit lower. So it would, let's say it would cost me 50 cents on a dollar wide spread. So my maximum profit would be to double my money, which is not bad. And I don't need much. Any fall would probably put it below my spread, and that would be a double on my money. And to finance that puts that I buy, I do the exact opposite and out in time to, say, November, October, or September. If I don't want to go out too far, so I don't have to live through another earnings cycle. But usually those with time die out to where I can buy them back down the line and close it. So that would be the time frame. The one I'm shorting, it would be shorter in time, but enough time on the clock, say August or longer. And the other one would be a couple months out from that. Depends on how the premiums are going to play out this morning.
Let's talk Amazon here for a second. Actually, on the numbers, Amazon was a little bit weak, and Amazon on the Netflix numbers, and Amazon actually is trading down 5 points here this morning as well. Kind of like a little bit opposite thing going on here with Netflix and Amazon as of late. I guess Amazon, a little bit of competition there maybe. What do you see in the technical setups here, though, in Amazon?
Well, Amazon technically is always looking bullish for me. It is a stock I don't usually short. and it has potential, upside potential. We do have catalysts coming. So I don't want to be shorted in the catalyst. Now, Amazon is the type of stock where if everything is perfect in the macro, it has room to do whatever it wants to do. Otherwise, it can fall really fast. So if we have a market correction, and by correction, I mean like -2 points apparently. But anyway, so no. if we have a correction, this one will run faster than the normal stock downwards, especially from these altitudes. Now, the company is exciting. I've been on board of the excitement for a long, long time. We remember talking about 600 levels and as being astronomical, and here we are. But there is a point in time where everybody has the same level of enthusiasm on what it can do. Then we are probably set up for some disappointment at some point in time. But I definitely don't short it. I go along it on dips, and it pays dividends every time.
Okay, a couple symbols coming from the chat here. Let's go to some of these smaller ones here. Actually, we'll go to Jar here first, and he's talking an ETF, the Eurozone ETF, EZBRA-U Eurozone. I don't trade this one, but you can give a technical on anything here, Nick. And what does EZU say for you in the technical world?
Well, it's pretty high, pretty fast, and I hear these experts on CNBC talk about, it's better to do. Everybody's regurgitating the same theme. I'd rather be in emerging markets. I'd rather be outside the U.S. When people I don't recognize are repeating the same meme out there, I get worried a little bit. So technically, sure, it's set up that if it takes out the recent highs, it's breaking a neckline that it developed recently in June, so it has upside potential from there. But I can't chase it just for the simple fact that it is a story that I've been hearing from people I don't recognize. So yes, technically, it is looking bullish if it breaks the neckline. It's some sort of it is cup and handle ish, and it took a while to develop. So I would not short it based on that. So if I wanted to short it, I would do it via debit put spread. But if I'm long it, there's no reason to get out of it.
Downward Dog wants to know about RPAI, retail properties.
Boy, I don't know what they do, but retail.
Me neither.
Yeah,
I'm assuming they do something with retail property.
Well, retail in general is not a good place to be, except for sporadically Wall Street says, hey, you know what? All our hate to retail, maybe not well deserved everywhere. Like I heard somebody says, maybe Macy's is basing right now. It's a good time to go long. Why? Why on earth would I want to mess with them? These guys, I don't know what they do, but here's what they look like. For the same reasons as that stock just before that, it is recovering. It's establishing a base. It has higher lows. It's knocking on a neckline of sorts. I drew a bunch of lines to show the point that there's a neckline here somewhere that it can continue. Again, if I'm long it, there's no reason to get out of it because it can gather steam. Now, 13 seems to be another pivotal point where they tried to base before in May and failed, and then miserably later, and they're going to come back to it. So it might be a point of contention for a little bit, and the bulls may have to work harder than normal. It looks like it has earnings coming a little later. So if I'm long it, I don't get out of it based on what I'm seeing in the chart. I don't know the fundamentals.
I got one for you here. Stock that's going to report here tonight, IBM. This has been a little bit of the dog of the tech sector, obviously, and it's a little bit more of a value play because it's got dividend of 3.92% here. But we know they got killed the last time they reported earnings, and they got killed when Warren Buffett, got disclosed that he had dumped a position here. Found support around 150, trying to climb, but really isn't doing much of a climb, and it's trading right down here this morning around 53.10, 153.10. What are your thoughts here on IBM, and are you playing this in earnings?
I am not yet. I usually play it just before the earnings if I want to. IBM is a stock that I was critical of it, I think, several times on the show too. It started way back with an interview with their CEO and Apple CEO. I thought they were they were windbags at the point. Anyway, if it loses the 150 area, I fear for it tremendously. Yeah. Also, you mentioned Buffett. The threat is looming. I thought he wanted to get out of his entire stake in it, and he couldn't because of the price action. So there's definitely
That's a good
another
point there.
There's definitely another headline coming, and even though we know about it, and even though the second time around it may be less impactful on the stock itself, however, it is a sizable stake, and there's no denying math, and it will drop the price. So I don't want to be long it when that headline hits. So I have no reasons to own this stock long term. They've failed to make the transition, say Microsoft, for example, in this new tech world.
Yeah.
They made a great Adobe made a great transition. A whole CRM established their existence on this new thing. So these guys, they have Watson. I bet you anything somebody will beat them to AI and monetizing it in a ubiquitous way. Like Google or Facebook or one of these guys is going to beat them to the punch.
I mean, we've heard about this Watson for a decade here now.
Yeah.
I mean, I don't even know what else. What else they got going on?
I remember as a kid hearing about some
on Jeopardy. Remember he beat the Jeopardy
computer
champion.
Playing chess against the guy. And
Jeopardy and chess against the guy, right?
Yeah. So what? I mean, you got nothing better than this?
Yeah, agree. I used to have IBM in my investment portfolio, and I dumped it for those same reasons there. I dumped it up in the 170 area because...
I would trade it. I would trade it.
Anything's tradable.
But
I love it. What about through 150? Let's just set it up, and let's say it does, start trading 149. Let's say it disappoints here. It reaches 150.
Okay, I would take a debit put spread, but I wouldn't go too low because 142.50, 142, 143 should be another point of contention because that's the last place they fought a big war below that. So technically, I see a lot of reasons to get there. To 142.50, 143, but from there they would need extra oomph to go lower. So if I wanted to short it, I would do a debit put spread near the money to double my money. And this way, I only have to guess the direction, and I would go out to August. I wouldn't try to do like sometimes Joel, since he's not here, we're back on him. He picks
we always pick on Joel,
points in time. Like he wants to short it, he'll say, "I'll short next week's because it's cheaper," and then he ends up wasting his money, and then a day later it falls. So I'd rather spend an extra few pennies to give myself a little more time. Therefore, I can manage my risk better.
It's so tough to play the weeklies, and I think there's a.
But you can play the weeklies. Just pick another week out.
Let's go a little bit farther.
Yeah.
When you're going with 2-3 days, you're just not giving yourself enough time.
In fact, playing the weeklies is better because sometimes they give you different breakpoints. So you see 50-cent increments. So if you don't want the $5 wide spread, you can find a 250. Or if you don't want the 250, you can find a $1 wide spread. It depends on the stock.
I've always made more money selling options than buying options. I think you're the same there, Nick.
Yes, that's because they say most options expire worthless. Why on earth would you not be selling them?
Good point there. Okay, a couple other stocks here that were on my list. We talked AMD already earlier this morning, but we want to talk its cousin NVIDIA here because NVIDIA has been a monster. It got hit when Citron had disclosed that they were bearish the stock, rallied up, sold off again in the late June, bottomed just under 140, and then we've been on a 7-day run here to take us back up to near the highs. What are your thoughts on NVDA?
I thought it was over the highs.
Did it get over it? 167.5, 168.5? Not quite. Didn't quite get there. We missed by a buck. Oh, right there at the highs. I have to admit that NVIDIA is above my pay grade as to the excitement.
I don't know what they do other than I know I have an NVIDIA card in my computer, but there's another element that I haven't followed up on with regards to new technologies coming down the pike, and they have the corner on that one apparently. But I don't want to short it, that's for sure. And I've said about the whole sector that we're becoming more technical in our lives. I mean, everything is depending heavily on technology, and it's going to be more, and it's an exponential rise. So, and I don't see a lot of new companies coming in. So if these are the companies that are going to help fuel these brains to make this technology in our lives happen, then there's room for all of them to prosper, and I shouldn't short anything in that sector. I have shorted NVIDIA a couple of times successfully just before Citron actually, and he actually paid me because of one of his notes came just after I shorted it. Nice. But I don't. Yeah, it was lucky. I don't short it based on the fact that it's too high. It's one of those stocks that is too high to chase if you don't want to chase it, but it's definitely too hot to short. You could probably try a debit put spread to short it temporarily. This way, if you change your mind the next day, you can get out of it for minimal loss. And this is the most mild way you can short a stock. I don't sell calls in stocks anymore because it's just, first of all, it doesn't feel good. Second of all, it is pretty dangerous. So buying a debit put spread where I buy a put at whatever level I want, and then I sell a put below it, the maximum I can lose is the money I spend up front. And I know exactly how much I'm going to make, but at least I'm not, I don't spend sleepless nights thinking about my short. And then if the stock drops, I make money. If it doesn't, I can change my mind and turn around and sell it for partial profit or loss. So this guy, kudos. And I definitely have no reason to short it. I may want to time it here and there, but over the long run, they should all prosper.
Seeing the market fall a little bit here. We've dropped about 2-3 points just since you got on here. Nick, you must be getting the market nervous here. The banks are really...
I'll tell you what it is. The oil is retracing back from 47 and change.
Yeah.
Which, by the way, Joel asked me, so how's your long oil play doing when oil fell? I said, I'm sticking to my gun. I had sold puts that went in the money, and I didn't back out of them because I had good conviction, and they paid. So it depends on... Take a thesis, play your own game, and take the information that you hear. Most of it is noise, including what we're saying here, but take it and see how it fits within your thesis. And if it convinces you that you're wrong, then okay, change your mind. But if not, then stick to your game and trade your own book. You do it, I know, professionally, otherwise you wouldn't last this long. And if I see a 5-point dip or 3-point dip in the stock market, I don't get out of my longs.
That's the trickiest thing in this market, and it's a lot different than when I started back in 1999, where maybe some trends were a little smoother, the books were a little thicker, you didn't have all this little oscillation volatile or these shakeouts. The one thing, when everything is automated now and you got a lot of high frequency traders, there's a lot of noise in the market, and the biggest thing is to try to ignore that noise. And it's something that everybody struggles with. I struggle with it at times too, and you do get shaken out of your positions every once in a while. I think you have a big advantage when you're going out with your options, though, is it allows you to ignore the noise probably more than an intraday trader.
There's too much hopium out there. I'll give you a point. I sold an iron condor on the RUT, which are the small caps index, and it's for July 31st, and it's at 1490, 1500. So I shorted it at 1490. I went long it at 1240. I collected $2 and change to open that, so my yield is over 25% easy. And they wouldn't let me close for 5 cents to 1240. So somebody is hanging on to hope at 1240 for 5 cents. It's like, dude, you're lost. Just let me buy it back and close the risk. They wouldn't let me do that. So there are other people. So you're competing. When you're trading, you're competing against the other person out there. So consider that. There are two sides to every trade. I hear these people on TV come out and say they were buying the calls at blah, blah, blah. There is a seller out there, right? They're not like immaculate buys. There's the other side of the trade who thinks you're wrong and they're taking your bet. So consider that fact and know who you're trading against. And this way you manage your risk better. And don't trade without a thesis. Don't trade because you heard somebody say that. If you hear me say, oh, this stock looks good, go long it or don't short it. Don't do that just because I say it. Do your own homework and see if that makes sense.
Banks really starting to fall out of bed here now. JP Morgan trading down 64 cents here in the pre-market. Citigroup's giving some back. Goldman Sachs is now down $2.50. Morgan Stanley.
DAC bounced a little bit.
It is. It's up from the lows. It's just down only 7 cents, so it's one that's holding on a little bit more. I just wonder, though, with the TLT rallying, like you were saying earlier, when you get that bonds going up, it usually is bad for the bank stocks.
Yeah. Well, here's the thing. The way, if you want to trade boring, you said that the low VIX is hard to make money. Low VIX is kind of a double-edged sword for me. I sell risks, so I want higher VIX, but I really don't, because higher VIX means higher moves here and there. But I want boring moves. Bank of America, I sold puts at 19 for December. I collected 60 cents, and now they're like 20 cents to buy back if I want to. I'm not going to buy them back. I'll just hang on to them. I'm protected with penny puts in between in case the markets crash. So if it falls through 19, I own the shares. Meanwhile, it made me a ton of money without having to spend anything out of pocket. So find your stocks, find a way you want to trade, find your thesis and do it. Just don't listen to CNBC and come up with trading ideas.
That's the biggest issue, and that's what everybody wants. Even people listening to our show is they're listening to us and they want us to say a stock to buy this or sell this, and we're always just trying to educate you. We try to give you ideas, but we want you to come up with the end result of whether I'm going to buy or sell the stock. All we're doing is throwing out a lot of ideas here. So yeah, and we try to talk strategy a lot too, so you can come up with your own trading ideas in the future.
Yep, I complain about CNBC on Twitter, and I make fun of some stupid comments I hear here and there. They say, "Well, why are you watching it?" Because I have to watch it. I need to know who I'm playing against. I need to know what they're thinking, and I'm not listening to it to get trading ideas. I'm listening to it to see what they think of what I'm looking at. And if they're not saying anything about what I'm looking at, I just mute it. But I definitely don't try to get trading ideas from other people. I've done it a couple of times where a friend of mine goes, "Oh man, you should do this or that on this stock or that stock." And sometimes I say, "You know what? I know nothing about it. You're telling me." I just jump in. I'll allocate $100 or $200 to buy that put or call or something, just to join you. I don't want to do the homework. I'll take your word for it when there's nothing on the line. But I don't put my livelihood at stake based on somebody else's opinion.
It's a great way to feel out sentiment as well, though, as watching CNBC. And when you get every analyst coming on and they're bullish, or every commentator that's talking about, or even on Fast Money, they're all jumping on some bandwagon. If you look, there's definitely, for everybody that's on Fast Money, usually you can predict whether they're going to be bullish or bearish just by looking at the chart. As soon as they start talking about a stock, you bring it up and you look, and the stock's in a hard uptrend or making new highs, the odds are they're going to be bullish. I mean, they're all momentum traders too. And if the stock's looking like hell on the chart, the odds are they're going to be bearish. It's rare for somebody to come on there, even an analyst, and be that person that's going to come on and say, "No, I think this is the bottom. I think you got to come in here and jump through." Everybody's a momentum trader here now.
Yeah, somebody mentioned long Macy's as an idea yesterday on that show, one of those shows. I was impressed. I was like, "Ooh, wow, ballsy." But anyway.
Yeah, because they don't typically. They just go with the flow, and they're going with what's strong, and the strong get stronger and the weak get weaker. And I mean, it works. I mean, that's
and they have to talk their books too. So, and I don't blame them for that.
Yeah, well, everybody does to a certain extent. Okay,
yeah,
before we let you go here, Nick, we got DC in the chat. She wants to know your thoughts on Novartis NVS. This is an ADR. It's getting a good pop here this morning. I'm not sure, Spencer. I don't know what the news here is on NVS. Maybe we can go hunt this down if this had earnings or not this morning. It wasn't on my list.
What's a good pop? Where is it at?
It's at 85.31 here this morning, so it's up $2.
Okay. Well, it's setting higher lows since that dip in 2016, since the elections here. I don't know what they do, Novartis. Higher lows, and this whole area, 85 to 86, is if they can break through it, because they failed last time at it, and I want to see what they do next time they come to that point of failure. And although it's not a perfectly drawn cup and handle, but the price action is higher lows, knocking on a roof on the past failure level. If they can break through it, it was a point of contention from way back in 2015, December. It seems like it doesn't like December, November areas. And it could rally higher. So again, just like a couple of the other stocks we mentioned today, if I am long it, I definitely don't have reason to get out of it right here. If I want to capture a move higher, I probably want to wait to see what they do around that next dollar.
To answer that point, they did have earnings. It was $1.22 EPS versus $1.18, and revenue just missed $12.24 versus $12.25 billion. Nic Chahine, you've been on with us for quite a while. Thanks so much for hopping on today, and we will talk to you again next week.
Thank you for the platform.
Thanks, Nick.
8:57, Dennis. Can we get a quick imbalance update?
Square, 79,000 to buy. SQ, that stock's just been a monster. It's kind of just in consolidation station here again. It seems like every time this starts consolidating, it's for a move higher. Somebody banking here this morning that's going higher, putting 79,000 to buy out there. JP Morgan, 118,000 to sell. The financials are in a world of hurt here right now. If I'm looking at what's bringing down the S&Ps, it's probably the banks. They're down significantly, although seeing some of the defensive issues down here as well. 3M's trading down the pre-market, 34,000 shares to sell on 3M. Citigroup, 8,000 to buy, but that's trading down. I'd expect that to flip. Wells Fargo, 54,000 to sell. That's going with the financials theme. GE still 86,000 to sell. Twitter sell balance has grown. It's now 60,000 to sell. Alibaba has had a buy and balance every single day. It's got a buy and balance again at 21,000 shares despite trading flat here this morning. So still somebody accumulating some BABA here on the open. ExxonMobil 43,000 to sell. I'd expect that to flip because oil has moved substantially higher here now. We've got the USO trading up almost 2%. Oil is the source of strength here this morning. Chevron's trading up. ConocoPhillips trading up. All your oil stocks are trading up here this morning. XLE and XOP both trading up substantially as well. So oil looks like it's going to be a source of strength here this morning.
And looking ahead to the afternoon, we mentioned a few of the stocks that are reporting later on today. We have IBM, CSX, UAL. Those are the big three that we'll have on excuse me, on our radar after the bell. Any last words, Dennis, before we go for the day?
Rotation today, that's going to be the story of the day. When you do see the TLT, it makes me think of some of the defensive names, some of the ones that have a yield that could be a little bit stronger when TLT is rallying. And you also see the banks very weak here early. Not that things can change very quickly. So you always got to keep it on the screen. TLT starts going down, banks will start catching a bit. But as of right now, if I'm looking at all the information I have for today, at least in the pre-market here, it looks like banks are relatively weak. Some of the defensive names are showing a little bit of life because the TLT is up. And we're seeing the oil stocks very strong. So also gold is trading up as well. So gold and silver both trading up, and you're going to see some strength there too in the individual gold miner names.
Alrighty, 8:59. Looking ahead to tomorrow's show, we're going to be joined by Kyle Dennis. He's a biotech trader as far as our show from today. If you missed any part of it or you just want to listen to our beautiful voices again, you can do so on our podcast, which is on iTunes, SoundCloud, and Stitcher. Also, you can just replay the show as it aired live on youtube.com/Benzinga TV. Subscribe there and you'll get notifications whenever we go live on YouTube. Don't forget about Benzinga Pro. You can get a free 2-week trial by going to pro.benzinga.com. And the Benzinga FinTech Summit is our fintech event coming up in September in San Francisco. Go to bzsummit.com to learn more, and if you want to figure out details about attending and other things you can do, you can email events@benzinga.com as well. So that's it for us today. Hope everyone had a good morning so far, and you have a good rest of your day, and we'll see you folks on.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.